Now, higher interest rates have put pressure on commercial property values, just at a time when their owners need to invest more in their assets to meet the higher standards expected by tenants. One solution that's existed for a while is to raise money on IPSX, the world's first regulated stock exchange dedicated to IPOs and trading of commercial real estate. But the cost of accessing new capital on the exchange has proved too expensive for some businesses. So the exchange has responded by seeking to cut its costs. Well, joining me now to talk about this are Anthony Gahan, he's the founder and chairman of IPSX, and Robert Taylor, chief executive and general counsel of 360 Law Group. Gentlemen, welcome to you both. Anthony, let me start with you. To what extent has the price dampened activity?
Well, I think actually there are lots of elements that dampen activity. Clearly, the equity capital markets have been fairly low volume in recent times. But the interesting thing, of course, is, and you've phrased it very well in terms of talking about the fact that real estate is in a quite tricky position at the moment with the higher levels of interest costs on, in some cases, quite leveraged assets. But also the change of use. This is the big thing, really, is how things have changed for people, and therefore is the demand for that particular type of building the one that is going to be there in the future. And what we're doing is offering an alternative way of raising capital, either to solve that problem by raising capital from somewhere else, because at the moment this is all in the private markets, and that makes it quite difficult.
So, Robert, what have you done to address this?
We've just made the costs of IPOing the property cheaper by obviously working through our own firm, which is a lower overhead cost base. You know, we don't have properties. We work through a high security IT network, and our lawyers work on that basis, which obviously reduces the overhead cost to probably somewhere in the region of about a quarter of the costs would normally be charged by firms that are traditional law firms that are actually working on capable of doing that market.
Does that mean that someone listing on the exchange or listing a fraction of their assets on the exchange has to now use you by default?
No, they can use any law firm that's capable of doing an IPO of properties. So, you know, it's an open market. They can use whoever they wish. Our lawyers are all very experienced. They're all capable of doing IPOs. They're all capable of, you know, they're all very strong corporate lawyers that have sometimes come from Magic Circle upbringings. You know, it's a question of choice, isn't it? It's just that our costs will be significantly lower than they would be if they went to the more traditionally accepted firms.
All right, Anthony, have you made any other changes, or is this the primary thing that you're trying to do to sort of encourage activity?
Well, we haven't actually made any changes to the fees, but the point is we're just making this accessible. The thing is that there is very little capital available in the private markets as we speak today, and that's across different alternative asset classes. But there's a huge demand for alternatives, and liquid alternatives in particular, for asset managers who are looking for something which has a yield and it has a capital gain potential and is maybe just that much easier to understand than a very complicated financial instrument that sometimes is offered.
I remember we spoke to your co-founder a few years ago on this programme. One of the interesting things there was that the rules that you put in place limited properties from being too overgeared, property assets. Is that becoming something of an issue given that interest rates have been rising?
Well, I think actually most of the issuers in the market have actually taken a fairly sensible view on leverage. So leverage is less of a feature, and in many cases investors like businesses, which could be companies with real estate assets, which have no leverage at all if they can get the right returns, obviously.
Robert, are you getting much inbound on this right now? Is it among commercial property clients? Are they concerned about getting overstretched?
No, we're not. In the all truth, we're not getting a lot of input on it. We are doing a fair amount of commercial property business, but nothing really yet in this regard. No.
So what's driving business activity? Presumably it is some of the bigger players trying to de-gear and offload assets.
Indeed, it is, yeah, exactly. That's exactly what is happening at the moment. And the types of property transactions we're seeing at the moment is exactly coming out of that.
And are there buyers out there for some of these assets?
Yeah, we're seeing some good commercial property transactions at the moment.
And what sort of valuations are they going through at compared with book value typically?
I just pick up the commercial property angle of it, so I'd have to ask my commercial property team, or Anthony.
Well, look, I mean, the valuation of any real estate asset should be the risk-adjusted value of the cash that comes off it. That's what it should really do.
Yeah.
And the difference between a private market transaction where you're just talking about an asset and a securitized property, where in fact you're looking at what's the economic benefit to you, is very, very different. And one has liquidity and one doesn't have liquidity. So that's where the prices sort of change. It's how much do I want to pay to get this income stream, which might be inflation linked in many cases, and do I know who the tenant is that's sitting behind it? Because that's really what you're looking at. You're looking at the risk of the person who's going to have to pay the rent.
Absolutely. Good to see you both. Thank you.